All right, let's talk about something that almost every small business owner runs into: needing a quick shot of cash. Not a massive, life-changing loan, but just enough to solve a problem, seize an opportunity, and keep things moving. We're going to get right into it.
So let me ask you, does this feel familiar? Your business is doing well, things are humming along, and then you hit a snag. Maybe it's a temporary cash flow squeeze, a surprise repair bill, or a killer growth opportunity that you just can't pass up. You know in your gut that just a little bit of funding would make all the difference.
If you're nodding your head right now, you are definitely not alone. There's actually a specific loan amount that hits this perfect sweet spot for businesses just like yours. It's big enough to actually make a difference, but it's small enough that lenders are way more comfortable with it, which means it's often a whole lot easier to get approved. And that magic number? It's $10,000. Yep. From a lender's point of view, this amount falls into a category they know really well. It's kind of on the line between a microloan and a small loan. They see these requests all the time, so the whole process can be way faster. This is the sweet spot we're going to break down today.
So what's the big deal about 10 grand? Why is that the number so many businesses go for? Well, let's dig into just how powerful and versatile this funding level can be.
I mean, just look at what you can do with it. That $10,000 can be the bridge that gets you over a scary cash flow gap. It can be the fuel for that new marketing campaign you've been dreaming about. It's how you stock up on inventory right before your busy season hits. It's your emergency fund when something breaks. And on top of all that, it's a fantastic way to start building your business credit for even bigger things down the road. Okay, so you're sold on the idea, but now for the $1,000,000 question, or the $10,000 question. What does a lender actually need to see from you? Let's pull back the curtain. It's not some big mystery. They're really focused on four key things.
First up is simply how long you've been around. For most online lenders, 6 months in business is kind of the minimum to get your foot in the door. If you want better rates, you really want to have at least a year under your belt. And if you're aiming for a loan from a traditional bank, yeah, they're probably going to want to see that you've been operating for 2 years or more.
Next, they want to see your revenue, and the key word here is consistent. Are you bringing in money reliably every month? For a 10K loan, most lenders are pretty comfortable if they see you're depositing somewhere between $5,000 and $10,000 a month. They're not looking for one giant month. They want to see a stable, predictable business.
And then, you guessed it, your credit score. For most newer businesses, your personal credit score is the main thing they're going to look at. You might be able to find an option with a score as low as 550, but honestly, to get access to good online lenders and decent rates, you really want to be above 600. And if you're over 680, you're in a great position.
Finally, this is the one that trips up a lot of people: your existing debt. Lenders are going to dig into what you already owe. See, even if you have fantastic revenue, if all that cash is already spoken for by other loan payments, you look really risky. They call this being stacked, and it's one of the top reasons for getting denied, because they're thinking, where is the money for our payment going to come from?
Now that you know what lenders are sizing up, let's talk about your options. I like to think of these as different tools in a financial toolbox. You wouldn't use a screwdriver to hammer a nail, right? Well, same idea here. Got to pick the right tool for the job. The first and most common tool is a short-term business loan. This one is super straightforward. You get a lump sum of 10 grand, and you pay it back with regular, predictable payments over a set amount of time, usually somewhere between 6 and 24 months. It is perfect for a one-time need, like buying a big piece of equipment or a huge batch of inventory. Your other main option is a business line of credit. And if there's one word to describe this, it's flexibility. You get approved for a credit limit, say $10,000, but you only borrow what you need when you need it. You only pay interest on the money you've actually used, which makes it an absolute lifesaver for managing those unpredictable expenses and smoothing out cash flow. So how do you pick? It's actually pretty simple when you see it side by side. If you have one big specific purchase you need to make, that short-term loan with its predictable payments is your best friend. But if you need an ongoing financial safety net to manage the ups and downs of cash flow, the flexibility of a line of credit is just unbeatable.
All right, you know what lenders want. You've picked your tool from the toolbox. So now let's put together your actual game plan. Here are the 5 steps you need to follow to make this happen.
First, know exactly why you need the money. Don't just say for growth. Say $4,000 for new inventory, $3,000 for a Facebook ad campaign. Second, get your documents together, especially your bank statements. Third, and this is so important, clean up those bank statements. No overdrafts, no negative balance days for at least 2 months before you apply. It matters. Fourth, choose your loan. But remember that faster funding almost always costs more. And finally, step 5, apply and then compare. Please, please, never just take the very first offer you get.
To give you an even bigger edge, let's just boil this all down to the absolute essentials. Here are the simple do's and don'ts that can literally make or break your application. So here's what you absolutely want to do. Focus on having strong, healthy bank statements with deposits coming in consistently. Do try to pay down some of your other debts to free up your cash flow. And do make sure you're applying for the right type of loan for what you actually need. You want to present the picture of a stable, well-managed business. Now, on the flip side, here's what to avoid. Don't apply blind without even looking at your own financials first. Don't be vague about your plans for the money. And this is a big one. Don't just shotgun your application out to a dozen lenders at once. That can actually hurt your credit. And like we said, just avoid trying to borrow more money when you're already swamped with debt. Okay, we've covered the why and the how. Now for the question that's probably been on your mind this entire time. What is this actually going to cost me every month? Let's make this really tangible. $10,000 sounds like a big number, but when you break it down into monthly payments, it suddenly becomes a lot more manageable. The exact payment is going to depend on 2 big things: your interest rate and the length of the loan term you choose. Just take a look at this chart. It gives you a really clear picture. If you get a great rate, say 8% APR, and you stretch the payments over 3 years, you're looking at around $313 a month. Totally doable, right? But if you're a bit higher risk, say at 24% APR, and you pay it back in just 1 year, that payment jumps up to almost $950. Just keep in mind, these are ballpark estimates for standard loans. So what does this all mean for you? Well, it's a strategic trade-off. A shorter 12-month term means a higher monthly payment, but you'll pay way less in total interest. A longer 36-month term gives you a much smaller monthly payment, which is great for cash flow, but you'll pay more in interest over the life of the loan. There's no single right answer. It's about what your business can handle right now. And that brings us right back to the beginning. You now have the complete playbook. You know what lenders are looking for, you know your options, you've got the 5-step plan, and you have a real idea of what it costs. So the only question left is the one you have to answer for yourself. Is this strategic $10,000 the key to unlocking your business's next chapter?